Mutual funds have become very, very important in our society with the increase in asset management, and they are starting to influence not only the economy but also society's choice more at large. So we thought it was important to understand what are their preferences, what are their beliefs, as they are expressed not by their statement but by the way they actually vote in the company meetings. My name is Enrichetta Ravina. I'm a financial economist, and I studied household finance, the way individuals make financial decisions, behavioral economics, and institutional investors' behavior. Investor ideology refers to a term borrowed from political science that means a coherent and consistent systems of beliefs. So that if someone has an ideology, you can almost predict the way they are going to act and vote based on who they are and how they voted in the past. So we decided to apply methods from political science that estimated the ideology of congressmen and senators to the votes of institutional investors. And the way this methodology works is looking at all your votes as an institutional investor, as a mutual fund family, and based on the company you keep, based on how often you vote with other institutional investors on similar projects, they decide what type of ideology you have. So in this context, for example, in case you're not familiar, in the US, if you buy a mutual fund like Vanguard or BlackRock for your 401k and retirement, this mutual fund holds on your behalf, let's say it's a S&P 500 mutual fund, it's going to hold 500 or so companies' shares. However, you, the retail investor, do not vote at the shareholder meetings of those 500 companies. The mutual fund does it on your behalf. And so that's why we call it proxy voting. They vote by proxy. You don't vote directly. And mutual funds have become very, very important in our society with the increase in asset management, and they are starting to influence not only the economy but also society's choice more at large. So we thought it was important to understand what are their preferences, what are their beliefs, as they are expressed not by their statement but by the way they actually vote in the company meetings. When we apply this methodology, our method is really agnostic, and that's an advantage in our view. We don't know the identity of the fund family voting, and we don't know what the topic of the proposal is. When everything falls after the analysis onto this plane, then it's up to the viewer to interpret it. And our interpretation is that the most important dimension explaining institutional investor votes is a left to right spectrum. On the left, we have funds that tend to vote in favor of social proposal, environmental proposal, pro-worker proposals. And on the right, on the contrary, there are funds that are more return-oriented, just mainly minimizing taxes, maximizing return. A lot of the value investing funds, like Gabelli Asset Management, for example, would be on the very right. Funds like Domini, Calvert, that if you look at their mission, they say they want to put society in their objective function, are actually on the left. The large funds, BlackRock, Vanguard, State Street, tend to be in the center-left in our analysis. So we have this proposal. A money-conscious proposal is a proposal that ignores society's factors and just tries to maximize returns. Just to give you an idea, almost all companies in the US for the shareholder meetings have several topics that they traditionally cover. Director elections, sometimes there are proposals that ask companies to keep the environment into account. They talk about political lobbying. They want to make sure that if they outsource production, there is not child labor involved, that the suppliers get a fair price. So the way we separate investors is that the investors that vote yes for this type of social proposal end up on the left, and the ones that vote against end up on the extreme right. So this is how we separate our investors. So in proxy voting, there are some advisors, ISS and Glass Lewis, that tend to analyze the proposals for the smallest institution, and they tend to aggregate preferences of mutual funds because they talk with the mutual funds a lot before issuing their proposal. So for each proposal that goes on the ballot, ISS will say, we advise you to vote yes or vote no, and this is why. And usually we would believe that most mutual funds follow ISS because this ISS determination comes after discussing with many mutual funds, and ISS acts a little bit like an aggregator of preferences. What we find is that if we put in our method one abstract institutional investor that votes exactly like ISS advises, we see that this investor is close to other investors, but there are very few investors, among the large one at least, that follow ISS every single time. So how can we have these coexist? How can money conscious and social mutual funds stay together and determine an equilibrium? It's beyond our paper to determine why certain funds vote one way or another. It could be they trying to reflect the preferences of their ultimate retail investors. Maybe they reflect their preferences of their employees, or they have a different view and different beliefs about what is the best way to maximize return. Should you have a short-term approach and just focus on minimizing taxes and maximizing return right now or in the short term, or should you have a more long-term approach? And so as a result of this, we will see that the asset under management and also the power of different type of investors coexist in the market and might vary over time with the evolution of society as well. One advantage of our methodology is that doesn't require us, the researcher, to take a view on what question to ask through our regressions. So we don't decide, I want to check whether people vote yes or no on an ESG proposal, for example. And that would open a Pandora's box of having to determine what is an ESG proposal, what is the quality of ESG proposal. We know that there is a lot of greenwashing in this area, and so how can we tell what's a good proposal, what's a bad one? Of course, we would do our best, but it would be difficult. This method is fantastic because you don't need to do that. You just see how people, what type of institutional investors vote with each other, and based on that, based on the reputation of the investors, you're going to determine what are the greenwashing, not serious projects from the very valid proposals. And it is also a method that allows to be agnostic about the question in some sense. You see who are the institutional investors that are different from each other, and then based on that, you decide, okay, what must be the source of this difference? Let's look at their identity, their mission statement. Let's look at the proposals on which they disagree the most. Those are the ones that tell you, okay, there is a left and a right dimension, and the left one can be interpreted this way, socially conscious, and the right one can be interpreted as money conscious. So we started working on this topic in 2017-2018, and our initial objective was to understand the interaction between finance and the environment. How does finance interact with climate and society at large, since finance is such a powerful force today? And with my co-authors, we started thinking, and we pretty quickly realized that it's institutional investors that hold a lot of power to induce companies to act one way or another. And so this is how we decided to focus on institutional investors. And then once we decided to focus on voting, it occurred to us we should use the long-standing methods in political science that have been developed over decades and have been very successful in determining is Bernie Sanders to the left or to the right of Hillary Clinton, what about Ted Cruz, and so on. And we are happy to see that since then there has been a lot of work done on this area. There is a lot of young assistant professor, PhD students, and more established scholars that work in this area.